you're a business owner who pays anyone to help you, even part-time or seasonally, or if you're someone who recently switched from a W-2 to a 1099 contractor, there's something that you should absolutely need to know. The difference between a W-2 employee and a 1099 contractor for tax purposes. This is one of the most common IRS audit triggers and one of the most expensive to get wrong. Here's the simple rule of thumb. If the business controls how the work is done, like setting the schedule, providing the tools, or directing daily activities, then the worker is probably a W-2 employee. But if the worker sets their own hours, provides their own equipment, and decides how the job gets done, and works with multiple clients, then they're most likely a 1099 contractor. Now, this matters not just for the employer, but for the employee actually doing the work. A lot of people are leaving traditional jobs to become freelancers, consultants, or self-employed, and they assume that being a 1099 automatically means more flexibility and better pay. But here's the catch. Just calling somebody a 1099 contractor doesn't make it true with IRS. Even if both parties agree to it, what really matters is the working relationship and how it operates. And for employers, misclassifying someone as a contractor when they should be an employee could mean that you're on the hook for back payroll taxes, penalties, and interest. That can add up really quickly. And for workers making the switch from a W-2 to a 1099, the tax responsibilities change too. As a W-2 employee, taxes are withheld automatically: Social Security, Medicare, and federal and state income tax. You'll receive a W-2 when the year ends, and you typically don't have to pay much more than you did throughout the year unless you have sources of income that came from somewhere else. But once you're a 1099 contractor, you're considered self-employed. That means you're responsible for paying for both halves of Social Security and Medicare. That's called self-employment tax, plus income tax. And in total, that's 15.3% on top of regular federal and state income taxes. You'll file your income on a schedule called Schedule C, and you can deduct qualified expenses like mileage, supplies, software, your phone, or even part of the home that you work out of. But here's the key: unless you're tracking those expenses and making estimated tax payments throughout the year, you could end up with a big tax bill and penalties. So whether you're hiring somebody or working for yourself for the first time, understanding the difference between a W-2 and a 1099 isn't just a technicality. It's the foundation of doing things right. If you're not sure where you fall or how to stay compliant, that's exactly what we help clients figure out. Whether you're an employer, a new freelancer, or someone working with a side gig, let's talk before it becomes a problem. Visit sansonecpa.com for more information.